Good afternoon and welcome to this week's update from Your Future Strategy. This week I'm going to cover three key areas. The first is the new framework, the three-step process that the federal government and National Cabinet released this afternoon, which gives us a guideline or at least an idea how we'll progress out of the current restrictions we're under. Secondly, I'm going to have a look at the housing market and in particular where first home buyers are at, and some latest statistics that have just been released. And then thirdly, I'm going to have a look at current interest rates, given that the Reserve Bank made their monthly decision on Tuesday this week. So let's start with the latest round of advice on easing the restrictions. As announced by the federal government and the National Cabinet, they have put together a framework or a roadmap that steps out the three stages as we ease restrictions and see those current restrictions lifted. They've left this to each state and territory to announce the timing of when each area or state will move through each stage, and they will effectively report and monitor this every 3 weeks. So let's have a look at the three steps as they were announced today. The first one is moving to more visitors at home and opening up restaurants, cafes, and shopping with restrictions around one person per 4 square metres and maximum of 10 people. As you can see, then stepping through step 2 or stage 2, more allowing more people within gatherings and opening up more areas like gyms, beauty, cinemas, galleries, and caravan and camping grounds. And then finally, stage 3, where it increases the gathering sizes to 100, everyone returning to the workplace, and then opening up potentially trans-Tasman travel between Australia and New Zealand. Obviously, with these restrictions being lifted, it'll allow us to see the economy start to open up and business come back to resuming if they've been shut down. Hopefully that helps with people and employment, which will only help longer term with the overall economic recovery. Second area I wanted to look at today, first home buyers and the property market. So the property market, there's been widespread varying opinions as to what's happening with the property market and what will happen with the property market. Some analysts are saying that there's going to be property price drops of up to 30%. Interestingly, the statistics for the month of April show that property prices, in fact, across Australia grew by 0.4%. So we haven't actually seen any drop yet, which you would assume we would have seen by now if we were going to have such a large long-term impact. Normally with the housing market, for first home buyers, it fuels actually price growth, because as they come into the market, people will then trade up and move up the property ladder. And so it's always an indicator as to what potentially will happen with property prices as we go through a cycle. So the graph that I've got here from the Australian Bureau of Statistics shows you the number of first home buyers who have borrowed for an owner-occupier, and this graph shows you since 2004 through to current how many there have been. Interesting to point out that March 2020 showed the highest number of first home buyers coming into the market in the last decade. So with those first home buyers coming in, as I said, it will have a flow-on effect or generally has a flow-on effect to the other areas. So I sort of, as a contrarian, don't agree that we're going to see these large drops that everyone's been reporting, particularly with the government assistance packages that are allowing people to continue to pay rent, pay their mortgages, the easing and allowing of mortgage holidays. Without that kind of stress and distress, we're not going to see these fire sales that show significant drops in prices. So the main impact will really be unemployment long term and how that affects the housing market. Another area I just want to touch on today, interest rates. The Reserve Bank obviously met on Tuesday, kept the rates on hold at 0.25%, which is what widely is expected to remain for up to another 3 years. So This is an area of savings for a lot of people if they haven't already addressed it. So I wanted to have a look at what are the rates that are available at the moment. So I've just shown in this table and on the next table as the rates pertain to owner-occupied loans. And of course, there's normally a slight margin on top of that for investment loans. But you can see here, this is the variable rates, the top three lenders, Adelaide Bank, Bankwest and AMP, all with their variable rates in the 2%, so between 2.7 and 2.84%. That's based on an 80% loan to value ratio, so borrowing 80% of the value of the property, and on a principal and interest basis. So if you're paying anything over 3%, really now is the time to refinance. And even lower than that, if you look at the fixed rates, because the outlook is that the rates will stay low for, or the RBA will keep the rate low for up to 3 years, the fixed rates are also very attractive. So again, based on borrowing 80% of the value of a property and repaying it on principal and interest, the fixed rate for 2 years with ING, 2.09%, and St. George, 2.24%. As you can see, incredibly low rates, at 2.09%, that's around $400 a week for $1 million mortgage, so very, very low. So again, like I said, if you are paying anything above 3%, now really is the time to refinance. If you are interested in looking at your options, please reach out and contact me, and I will introduce you to Simon, who's our in-house mortgage broker that works with property investors and property owners. Make sure you've got the best product, most suitable product, and the most competitive rate. That's it for this week. Obviously, again, usual disclaimer, those rates, etc., obviously have some lending criteria that applies, but again, everyone's circumstances are different, so this is just general information, needs to be applied to your own circumstances. That's it for us this week. Look forward to bringing you further information next Friday.